Throughout history, one truth has remained consistent: gold and silver have served as the ultimate foundation of financial systems. Today, despite the dominance of fiat currencies like the US dollar, euro, or yen, the reality is that these currencies are mere substitutes or derivatives of real money, gold and silver. Gold isn't something that needs to regain its preeminence, it already holds that position. When you transfer fiat currency, whether dollars, euros, or yen, you are effectively transferring a derivative of gold or silver. The fiat currency itself is a substitute for real money. The issue at hand isn't when gold will reclaim its status, but when fiat currencies will lose their dominance. The cracks in the fiat system are becoming increasingly visible. Throughout financial history, every fiat currency has eventually failed. None have stood the test of time. Conversely, gold and silver have proven themselves as the bedrock of real money systems, enduring through centuries of political upheaval, economic crises, and societal shifts. History offers countless examples of fiat currencies collapsing to zero value. From the hyperinflation of the German mark in the 1920s to more recent examples like Zimbabwe or Venezuela, fiat systems have repeatedly shown their vulnerabilities. Each time, people turn back to gold and silver for stability. Why does this happen? The answer lies in trust. Fiat currencies rely on faith in governments and central banks. However, when these institutions falter, as they inevitably do, the value of fiat money evaporates. Gold and silver, by contrast, are tangible and universally recognized as valuable, independent of any government's decree. The Federal Reserve's negative equity. The current state of the Federal Reserve underscores the fragility of the fiat system. For the first time since the early 1980s, the Fed is in negative equity, meaning its liabilities exceed the value of its assets. This development signals deep systemic risks. The Fed's assets primarily consist of U.S. Treasuries and mortgage-backed securities. However, as interest rates rise, the value of these assets falls. At the same time, the Fed must pay increasing interest on excess reserves held by commercial banks. This dual pressure puts the Fed in a precarious position with growing liabilities and diminishing asset values. Essentially, the Fed is caught in a downward spiral. To sustain the system, it must print more money. But each new dollar it creates is less backed than the last, further eroding the currency's value. One of the most significant risks stemming from the Fed's current situation is hyperinflation. Economically, hyperinflation occurs when the desire to hold cash balances falls to zero. And financially, it can also be defined as the moment when a central bank's liabilities, its issued currency, become worthless. The Federal Reserve is flirting with this scenario. Traditionally, dollars are backed by the Fed's assets, like treasuries. But as those assets lose value and the Fed prints unbacked dollars to cover its obligations, the dollar's legitimacy as a store of value erodes. This process is not theoretical. History is littered with examples of currencies collapsing under similar conditions. If the dollar follows this path, the fallout will be catastrophic, not just for the US, but for the global economy. Since the 2008 financial crisis, the Federal Reserve and other central banks have engaged in unprecedented monetary policies. Massive amounts of money were printed to stabilize the economy, leading to the creation of an unsustainable system. The COVID-19 pandemic exacerbated this trend. Trillions of dollars were injected into the economy to stave off collapse. However, this short-term solution has created long-term problems. The sheer volume of dollars now circulating means the Fed faces an impossible choice. This would undermine the Fed's credibility and destabilize the financial system. Destroy the dollar. Printing more money to cover losses would lead to hyperinflation, rendering the dollar worthless. In either scenario, the consequences for the global economy would be dire. In this context, gold and silver stand out as safe havens. When the Federal Reserve inevitably reverses its interest rate policies to manage inflation and stabilize the economy, the value of gold and silver will surge. This isn't speculation, it's a historical pattern. When fiat currencies falter, people turn to real money. Gold and silver have intrinsic value that doesn't depend on trust in governments or central banks. As the global financial system edges closer to a singularity, a point of sudden and dramatic change, gold and silver will likely become the standard for wealth preservation. The transition may be chaotic, but the outcome is predictable. Real money will outlast fiat substitutes. The challenges facing the Federal Reserve are not unique. Around the world, governments are grappling with unsustainable debt levels and failing monetary systems. In reality, most governments are effectively bankrupt. Their inability to sustain fiat systems will soon become apparent. When this happens, those who hold real assets, gold, silver, land, will fare better than those who rely solely on fiat currencies. However, even for those with real assets, the transition won't be easy. Economic upheaval affects everyone, though it punishes some more harshly than others. The financial turmoil of the 1970s offers valuable lessons. During the oil embargo of 1973, food prices skyrocketed and fears of hyperinflation loomed large. Yet, paradoxically, gold prices fell sharply between 1974 and 1976. This decline puzzled many at the time, given the economic conditions. However, from 1976 to 1980, gold prices quintupled, reflecting its enduring value. The lesson is clear: temporary fluctuations in gold's price do not undermine its role as real money. We may be in a similar situation today. Despite short-term volatility in gold and silver markets, the fundamental principles remain unchanged. Fiat currencies are built on a fragile foundation, while gold and silver are immutable. The global financial system is approaching a tipping point. Central banks are running out of options, and the consequences of their actions are becoming increasingly evident. As this unfolds, the world will witness a return to real money. Gold and silver will regain their role as the foundation of financial systems. The process won't be smooth, but it is inevitable. The key takeaway is to prepare. Those who recognize the value of real assets now will be better positioned to weather the coming storm. History has shown that gold and silver endure when fiat systems fail. That lesson is as relevant today as it was centuries ago. In conclusion, the current era of fiat dominance is nearing its end. The signs are clear, from the Federal Reserve's struggles to the growing risks of hyperinflation. As trust in fiat systems erodes, the world will turn back to gold and silver, the true forms of money. The only question is when this transition will occur. Based on current trends, it may be sooner than most expect.